It's time to learn about what I think is the cruisiest and also the best way to invest in the stock market, by investing in ETFs. You see, I'm so lazy and would rather lay around all day or chase tennis balls around my yard rather than wasting time researching companies and reading spreadsheets. But I hear you ask, what exactly is an ETF? Well, you're about to find out. An ETF is an exchange-traded fund. It's just a fancy way of saying a group of assets compiled to track a sector or index. Still confused? We can break it down even more. This is how we usually think of investing on the stock market. We pick a few companies we like and we start trading and buying their stocks. This is all fine, but if we only have a couple of companies and only are spread across a couple of sectors, whether that's banks, energy stocks, or maybe dog biscuits, then we aren't really diversified, and therefore we're prone to increased volatility and risk. Basically, we've got all our eggs, or all our dogs, in the one basket. But ETFs are the best way to get around this. You can trade an ETF as you would with any other normal day-to-day stock, but instead of buying into one company, you can spread yourself right out across several sectors and even hundreds of companies, all in the one transaction. So if you invest in an ETF called VAS by Vanguard, for example, which is a fairly popular Australian index ETF which tracks the performance of the top 300 companies on the ASX, you straight away have massive diversification. ETFs are really growing in popularity for so many reasons, but here's my top 4 reasons to consider ETFs for your portfolio. They're an efficient way to invest in the market. You can leave behind the stress and worry of sweating on individual companies and save yourself so much time. There's also significant savings on brokerage costs to consider. Can you imagine trying to invest in all the top 300 companies on the ASX individually? It wouldn't make any sense. You'd be slugged brokerage fees for every single transaction. But instead, you could make just one transaction through an ETF and immediately you have a slice of all of those same companies. It does get much more efficient than that. They are a good way to manage risk. While there are more and more niche ETFs emerging these days, generally the most popular ETFs are extremely diverse index ETFs, which can track Australian, international, emerging and small cap markets, giving you a really broad exposure in your portfolio. A basic rule of investing is to diversify to manage your risk, and ETFs provide a great tool for this. Rebalancing. Many ETFs offer automatic rebalancing too. So if a particular sector or market is going poorly, or another is performing strongly, an ETF such as Vanguard's VDHG will automatically adjust its weightings across different sectors to maintain its integrity. This means you, as an investor, can sit back, relax, and know you'll never be overexposed to a particular sector despite any fluctuations in the market. A quick note that ETFs do have a management fee for this, but they're generally super small and completely worth it. The best thing about ETFs is it's all just so simple. If you stay the course and invest long term across an index ETF like VAS, you're basically investing in the entire Australian share market. The old saying goes that past returns don't guarantee future returns, but the history of the Australian share market shows one consistent trend. Can you guess what it is? Thanks for watching my video. I hope you've learned about the power of ETFs and what they can offer to your portfolio. I'm going to bed to dream about dog biscuit ETFs. That sounds like a winner to me.